Now, you don't need to purchase anybody's $2,000 course to learn how to invest as a beginner, because I'm going to show you exactly how, step by step. And if you follow along all the way through, by the end of this video, you will not only know how to invest, but you'll also have your brokerage account open and you will know exactly how to purchase your first stock. Now, before you go putting your money in the stock market, you actually need to know how investing works and why you should even be investing in the first place. In simple terms, investing is simply putting your money into a company or a property that is going to increase in value over time. Now, as that company or that property grows in value over time, so does your share. And when you sell it, you're able to get cash based on how much it's worth at that time. Now, sometimes companies will also share a part of their profits with those who have invested in their companies, and this is called dividends. Now, when it comes to stocks, the way that you show how much your investment has grown over the year as a percentage is what we will call annual return. When it comes to the U.S. stock market, it has historically had an annual return of 10%. Now, this does not mean that you're going to get 10% every year, but over time, on average, the market has yielded a 10% annual return. So here's an example of how this works. So say that you invest $100 and that money grows by 10%. So in the end, you're going to have $110. Now, say that that investment grows another year, it's going to grow by 10% on that $110 instead of the $100. This is what we call compounding, and it's your money growing on top of previous growth. And this is what allows your investments to grow faster over time. Now, the whole idea of investing is to allow your money to grow through businesses or properties that you believe will increase in value over time. And this is important because money loses its value over time due to inflation. Now, inflation simply means that a dollar 10 years ago went much further than a dollar today. And investing allows your money to outpace inflation and grow faster than inflation so that you can afford to live in the future. This is why it's so important to start investing now so that your money has a much longer time to grow. And you can start with just $1, which I'll talk more about later in the video. Now, you're probably thinking, okay, I get how investing works. I know that I need to do it, but what companies do I even invest in? Now, as a beginner, you want to keep things as simple as possible. And the simplest and safest investment that you will make as a beginner is to invest in index funds, specifically those that track the S&P 500. An index fund is just a basket of shares within various companies that allow you to diversify. So instead of buying individual stocks in 10 different companies, you can now buy one stock that tracks the performance of those 10. Now, the S&P 500 tracks the 500 largest U.S. publicly traded companies. So companies like Apple, Amazon, Google, those types of companies. So instead of having to invest individually in each of those companies, you can now invest in index funds that track the performance of those top 500 companies. So essentially, when you buy one share in an index fund that tracks the S&P 500, you are essentially investing small portions in those 500 companies. Now, this is the safest way to invest in the stock market because you're not putting all of your apples in one basket. So if you invested in one company and they do really bad, that means all of your investments are going down versus diversifying over 500 different companies. If one company goes down, then you have another company that may go up and it balances out that risk. So the best way to invest as a beginner is to invest in an index fund that tracks the S&P 500. Now, I'll get deeper in the details on how to do that in my walkthrough, but for now, know that you want to diversify by investing in an index fund that tracks the S&P 500. Now, in order to buy stocks, you have to open what's called a brokerage account. A brokerage account is where you're going to buy and hold your shares within these companies. Now, you can open one through Fidelity, Vanguard, Charles Schwab, Robinhood. The list goes on. They're all beginner friendly and there are no fees to actually open your account. I personally have both Fidelity and Charles Schwab. And for this video, I'm actually going to be walking through in my Fidelity account. I have no incentive to promote one or the other. Just find one that you are comfortable with. But if you just want a simple way to follow along, know that I will be using Fidelity. Now, in order to open these accounts, you're going to need personal identification information like your social security number. And you're also going to need to have your bank account information available because you need an account to actually fund the brokerage account. Now, this This may take a few days to get approved and everything working, but make sure that information is available. Now, opening your brokerage account should only take a few minutes, so I'm going to pause and share my screen and walk you through how to actually open your brokerage account, specifically with Fidelity, but it should be the same with any of them. You want to go to the website, set up an account, and you want to make sure you're opening a brokerage account. There will be other options of accounts that you can open, but we're specifically looking to open a brokerage account. All right, so here I am on the Fidelity website. This is where you're going to be able to go, fidelity.com. That's all you got to do. And as you can see very clearly, you have the option to log in or open an account. So if I'm just opening an account, I'm going to click here, open an account, and that's going to take me to another page. And as you can see on this page, there are several different things that you can open up as an investment account. We specifically want to click on brokerage account. Once I have clicked on that, if I'm not a Fidelity customer, obviously I'm going to click no. If you have like your 401k with Fidelity, just click yes. For the purpose of this video and this walkthrough, I'm just going to click no, I'm not a Fidelity customer. And then I'm just going to click next. And as you can see, it'll prompt you with some questions that you'll just have to answer. I'm just going to say it's just for me. It's not a joint account. But if you want to create a joint account, then by all means, select what's appropriate for you. And as you can see, as I said, there's going to be where you're going to be able to put in your information, all of your personal information, typical stuff. Now, I'm not going to fill this out, but you will just follow the prompts that it provides for you to fill in your personal information so that you can get started with the account. So now that you have your brokerage account open, you have your bank account going through that approval process, you need to really decide how much you actually want to start investing with. With Fidelity, you can invest with as little as $1. However, for the purpose of just getting started and putting something in there, I would say let's plan to have around $10 to $20 to get your investment started. You can always adjust this up or down as you see fit and based on your budget, but you want to have something that you can get started with. Now, here's the thing, and it probably should go without saying, make sure that you actually have money to cover your bills and that you have an emergency savings already set aside before you actually start investing. You want to make sure that you're financially stable before you use extra money to start investing. Now, it should also go without saying, but you want to also make sure that you have the money that you want to invest in the bank account that you've connected to your brokerage account so that you can go ahead and make that transfer seamlessly and the money is already there. Once you know how much you want to invest, we need to figure out what you're actually going to invest in. We've already talked about index funds that track the S&P 500, but there are so many different ones that do that job. You have mutual funds and you also have ETFs. So let's start by breaking down what those are and how they are different. And then we're going to talk about exactly which index funds you can choose that will track the S&P 500. Now, both mutual funds and ETFs, or exchange traded funds, both pool money together to diversify a portfolio. So they are taking your money and essentially diversifying it. The main difference here is that ETFs can be traded like individual stocks throughout the day, whereas mutual funds only have one trade at a set price each day. Now, the fees are also a little bit different. Mutual funds are typically higher versus an ETF where the fees are a little bit lower. Both do the same job, but if you want to be conscious about, what you're spending in fees, then go with the ETF that has the lower fees. Now, knowing that the ETF is often lower cost, I am going to try to find an ETF that tracks the S&P 500. There are several that do that. So as you are looking up different ETFs that you can invest in, or even within your brokerage account, you just want to type S&P 500 ETFs. Now, at the end of the day, because they are tracking the same companies, you should expect around the same or similar results. Now, let's actually walk through the process of purchasing both the mutual fund and the ETF so that you can see the difference. So here I am on the home page of my account once I'm in. This may look different for you once you just created your account, but what you're looking for is going to be the same. So we are going to begin a trade. When you are buying or selling, it is still considered a trade. So we're going to click trade here. Now, if you're with a different brokerage, it's essentially going to be the same. You're looking for the word trade because you're either buying or selling. So as you can see, once you click on the button trade, it's going to ask you what kind of trade you want to make. So you can do stocks, ETFs, options, mutual funds, so many different things. But I'm going to show you how to do an ETF or a mutual fund. So I'm going to just select ETFs for this case. In your case, you're going to select your account. I'm not going to do that right here, but then we're going to click on symbol. Now we're going to select the symbol for the ETF that we want to purchase. I want you to think of symbols just like an airport. An airport has abbreviations that they use to identify what airport it is. The same thing is true for these stocks. You're going to have different symbols that represent the different ETFs, mutual funds, so on and so forth. Now, if you don't know what S&P 500 ETF or mutual fund you want to purchase, the simple way to do this is going to be just type in 500 in the symbol. And what this is going to do is drop down the different ETFs and mutual funds, because this one is a mutual fund, but it's going to show you the different ones that you're able to purchase through this Fidelity account. So in this case, I'm just going to go with the Vanguard S&P 500 ETF. And as you can see today, at the time I'm recording this, the cost is $602.49. And so I'm going to go down and I'm going to say, hey, the action that I want to take is I want to buy this ETF. And instead of quantity here, which you can, if you have the full $600 and something, you can by all means say, hey, I want to buy one share. And that's going to purchase you one share of that ETF. Or if you're just beginning, I recommend starting with a dollar amount. So Fidelity allows you to purchase your ETF by dollar amount. So meaning you don't have to have the full $600 and something. You can just put in a dollar amount that you want to spend. So I'm going to go here and I'm going to change that drop down to dollars. So I'm going to put in however many dollars I have to invest. So if I only have $20, that's what I'm going to put in, and it's going to allow me to buy a fraction of that ETF. So instead of buying the full share or the full ETF for $600, I'm going to get $20 worth. It's kind of like when you go get gas, put 20 on, pump 5, right? So you're going to put 20 on that ETF and you'll get a fractional part of that ETF. Not all brokerages will allow you to do that, which is why I wanted to show Fidelity, because it does allow you to do fractional ETFs. Some other brokerages will not allow you to do that. So I'm just going to put the order type is going to be market. Now, the difference here is that you're simply just going to buy at the market price, or if you put limit, this applies if you're buying the full thing, right? So if you put limit, you're going to say, this is the limit that I'm going to pay for this ETF. So your limit could be $603. If it goes above 603, it's not going to buy it. But if it's at 603, that's your limit. It will make that purchase. We don't need to complicate it like that. We just want to say, what is the market price? We're not buying the full thing anyway, so we're just going to click market. And then the time in force is going to be day. Is only one option. We're going to buy it today. Then I'm going to hit preview order. It's telling me that I have a $20 quantity. That's the estimated value that I will be purchasing. And then essentially I could purchase or place the order. And so in your case, you would simply place the order and you would have bought your first ETF. Now I'm going to go back really quickly and I'm going to show you some things. I'm going to hit edit. Let's go through a mutual fund example. If I click here, I have my account. It shows me how much cash I have available, but I could also fund this through a bank account. I'm going to put in Fidelity's mutual fund that tracks the S&P 500. And then my action would be to buy, or I could set up buy recurring. Right now, I'm just going to hit buy and I'm going to put in that dollar amount. So again, I will put that $20 amount there and I will hit preview order. And as you can see, it will let me know, hey, it's going to be completed at the next available price. And then in the same case, I'm going to hit place order. Now, one last thing that I want to show you, you can actually automate your investing. So if I were to go here at the top, the type of trade that I want to do is recurring investment. And this is going to allow me to automatically invest. So instead of having to buy my ETF or my mutual fund individually every single time, I can set it up to where every time I get paid, I want to buy $20 of this ETF or $20 worth of this mutual fund. So again, in this case, I'm going to decide whether I'm going to do the ETF or if I'm going to do the mutual funds. I'm going to select what account is going to. I'm going to put my symbol in. So in this case, let's say we do the Vanguard again, and then I am going to say, hey, every time I do this, I want to invest $20 into that particular ETF. I'm going to select the frequency. So is it going to be weekly, every 2 weeks, or monthly? So let's say I want it to coincide with my paycheck. I'm going to put every 2 weeks. And then I can select the day. So if it's going to be payday, I'm going to say Friday, right? And then I can start the date. So say you want to start on the coming Friday when you get paid, you will put that date. You don't have to put an end date. And then we want to use the linked bank account. So when you set up your brokerage account, you linked it to your bank account. In this case, you would toggle that on to use your linked bank account. And then you would do the same thing, hit preview, and you will be able to set up that purchase. So let's say we just do preview, and then you would go ahead and confirm it. Now, I mentioned earlier that some companies will issue dividends, so they will give you a portion of the profits that the company made. In this case, you have the option to either cash out these dividends, or you could do what's the smart thing to do as an investor, which is to reinvest these dividends. So there is a way that you can automatically reinvest the dividends that will be in your account, such that you can buy shares automatically. So let's walk through how to set that up in a Fidelity account. So the next thing that you want to set up in your account is going to be automatic dividend reinvestment, or DRIP. And this is where anytime you have dividends from your investments, instead of cashing that out or just letting that money sit in your brokerage account not invested, you actually want to reinvest back into that ETF or mutual fund or individual stocks that you may have invested in. So in this case, with Fidelity, I'm just going to click more within my dashboard, and then I'm going to hit account features. So within my account features, I'm going to look for dividends and capital gains, and I'm going to select manage. Once you're here, you want to hit manage settings, and then you want to go and make sure that for all of your accounts, it says reinvest in security. And so this is going to automatically make sure that any dividend that you receive is going to be reinvested back in that same ETF, mutual fund, or stock. Whatever you've invested in is going to make sure that it automatically reinvests, so you don't have to do it individually. You can set it up as an account setting. You are officially an investor. This is how simple it is to begin investing in the stock market. But here's the thing that I want you to know. Do not check your stocks every day. Don't panic when the market goes down. I don't want you looking at the stock market and seeing something has tanked and all red and panicking and trying to sell. Don't do that. You want to be a long-term investor, meaning put the money in there, let it compound over time, check it occasionally just to see how things are growing, but do not panic. Do not be checking your account every single day. Let your money do its work. Now, if you are looking for a community of other women and moms who are investing and building wealth, then I want to invite you to join my free private community where we are holding each other accountable. There's daily coaching and accountability to help you build wealth and really grow your finances. So if that's something that you're interested in, comment community or scan the QR code to get the link to join. Now, with that said, check out these other investing videos so that you can build up your investing muscle. I'll talk to you in the next video.